This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. I'm going to go through the Specimen Exam for Paper F2. And the Specimen Exam because the ACCA don't release past papers. So make sure you've got a copy of the Specimen Exam from the ACCA website. There's a CBT version for those of you doing it on computer. There's a paper version. But the specimens, they're both exactly the same questions, whichever way you're doing it. Now, before I go through the questions, just a few general points which I think are important. Firstly, if you are doing the exam on computer, do practice on the ACCA website and get used to what the software looks like. You know, there's an arrow to go to the next question and that sort of thing. You don't want to waste time in the real exam sorting out whereabouts you've got to click, sort of thing. Secondly, do appreciate the pass mark for the exam is 50%. You can do the questions in any order, but particularly, and this is important for the multiple choice section, Section A, that although all the questions in Section A are 2 marks, some of them are harder and longer than others. Others are much, much quicker and much easier. And that's deliberate. It's going to be in every exam. Deliberately, they have some questions which they know they sort of file as being relatively easy, some that are hard. The computer selects questions at random, but there will always be the mixture. And the reason it's so important is when you start the exam, most people quite sensibly start at question 1, go on to question 2 and so on. But as soon as you come to a question that is on something that you know you can't do, or if it's a very long question, or it turns out to be difficult, you must jump the question and carry on to the others. It's pointless wasting 10 minutes on one question. If you do, you won't finish the exam. There's enormous time pressure. You're going to leave some unanswered. It's better to lose 2 marks rather than waste 10 minutes on one question, when those 10 minutes, there are going to be plenty of relatively easy questions later in the exam where you can get more marks. You can always come back later, but the minute you come to what turns out to be a tricky one, jump over it. When you get to the end, if you've still time left, you can come back and spend obviously more time on the harder ones. But that is important. Do be careful. You will get paper on which to do workings. Certainly for numbers questions, you will usually need to do some workings. But don't waste time being pretty. Nobody will look at your workings. A computer marks it. I'll try and be neat as we go through on the screen so that you can follow me. But don't waste time in the exam. I've already said there is enormous time pressure. Most people find it extremely difficult to finish the questions, let alone get them right. And last of all, and then we'll start going through them, certainly again in Section A, in the multiple choice section, there are 35 questions, you must answer all of them, even if it means guessing. There are bound to be some that perhaps you can't do, or you can't get any of the 4 choices. You're quite likely to run out of time, and so there'll be some questions left unanswered at the end. But the minute you see there's only a few minutes to go for the exam, you must go through and you must guess any answers. You must guess the answer to any questions that you've not finished. You don't lose marks for getting ones wrong. There's no negative marks. If you get it right, you've 2 marks. If you get it wrong, it's 0. But if you leave 5 questions unanswered, you're silly. 5 guesses, you're almost certain to get at least one of them right by guessing. It may only be 2 marks, but if you fail on 49%, those 2 marks clearly would have been critical. I'm about to go through them. I'll go through them obviously in order. I'm not going to jump around. But I can't say enough times, it's so important. Once you come to a hard one, don't waste any time at all. Jump over it. If you have time, come back to it later. Okay, well, let's start going through Section A of the Specimen Exam. One by one. Question 1. Always look at the requirement first, but what type of benchmarking is the company using? Benchmarking, where you're comparing what we do with something else, you've got something to compare it with. What does it say? It says a manufacturing company benchmarks the performance of its accounts receivable department with that of a leading credit card company. Well, it should be fairly obviously not A. It's not internal benchmarking with another company. It's tempting to say it's B, except it's our accounts. We're a manufacturing company. It's comparing with a leading credit card company, so they're not a competitor. It would only be competitive benchmarking if it was a similar type of business, so it's not a B. C, functional benchmarking, yes, because we're looking at one part of our business. We're a manufacturing company. The accounts receivable department is only one little bit of our business, one function, and so it is functional benchmarking. It's not D. D, strategic, is looking at more long term. So the answer is C. There's one, incidentally. I spoke before about how important it is to have got an answer to every question, even if it's a guess. There's one where it's a quick one to read. I think really you either know the answer or you don't. If you've not heard of benchmarking, maybe you've no idea. Well, there's no point in reading it 20 times. If you don't know the answer, you never will. And so have a good read. If it's clear, there we are, it's C, and off we go. If you realise you've no idea, well, guess it and forget it. Anyway, let's carry on. Number 2. Another, I call these written ones. We're not writing, but obviously there's no arithmetic involved. Which of the following best describes target costing? Well, I hope you've been through all the lectures and read the course notes, in which case it shouldn't take too long, apart from the time it takes to read, especially obviously if English is a second or third language for you. Anyway, which of the following best describes? A, setting a cost by subtracting a desired profit margin from a competitive market price. Well, if you have studied, you should realise immediately that that is the correct answer. With target costing, we decide on a price first, a competitive market price, then we decide what profit we want, subtract the profit from the price, and that tells us what cost we're aiming for, the target cost. The others, quickly, because they're obviously not right, the answer's A. B, setting a price by adding a profit margin to a cost. No, price comes first. It's from the price that we end up with the cost. C, setting a cost for the use in the calculation of variance. It's nothing to do with it. Nothing at all to do with target costing. And fine, setting a selling price to aim for in the long run. Well, again, that's not what we do with target costing. We set a price in order that we can calculate a target cost. 3. The first one that needs any numbers. Information relating to 2 processes, F and G, was as follows. And for each of 2 processes, they've told us the normal loss, the expected loss. They've told us how many litres we input and how many litres we output. Now, this is an example of one where you can get the right answer in several ways. I'm not going to do it 2, 3, 4 ways here. I'll do it the way I do it, which I think is as quick as any. F, what would be the expected output? Well, the input was 65,000 litres. if we expect to lose the normal loss of 8%, surely the remainder of 92% is what we expect to output. So 92% of 65,000 is 59,800, whereas the actual output is 58,900. So we've lost more than we would have expected. We've got that extra loss or abnormal loss. So with F, it's an abnormal loss. And so although this one shouldn't come down to guessing, if you do end up having to guess, it has to be the answer C or D. 50% chance of getting it right. Anyway, if you can do one, you should be able to do both. So what about G? The input's 37,500. We expect to lose 5%, and therefore we expect we'll produce the other 95%. So the expected output is 35,625. The actual output is 35,700. So this time we've ended up with more produced than we would expect, with an abnormal gain. Excuse me. So the answer to that one is C. Good. Number 4. Here's one where too many people waste too much time, but if you've learned the rules, there should be no problem. It says, what would be the profit for next period using marginal costing? When they give us, when we look back at the information, they've given us budgeted information, production, sales, fixed production costs, fixed selling costs. They told us the normal level of activity. And they've said using absorption costing, the profit for the next period has been calculated at 36,000. Well, this should be pretty quick as long as you're careful. You should have learnt, and you must learn, and you must remember that the only reason marginal and absorption costing give different profits, the difference between the profits, it'll only ever be because of the way we value inventories. It's always the change in inventory times, well, the reason we value inventory different, marginal only takes variable costs of production, absorption includes fixed costs as well. So it's the change in inventory times the overhead absorption rate. And so what will the difference in profits be here? The change in inventory? Well, we produced 14,000, then we only sold 12,000. And so, surely inventory must increase by the difference of 2,000 units. And what's the overhead absorption rate? Well, the overhead absorption rate, it says the fixed production costs are 63,000. The normal level of activity, so the average, 14,000 units. And so the absorption rate is $4.50 per unit. As a result, the profits will be different by 9,000. We want the absorption profit. I beg your pardon, we want the marginal profit. Well, again, you must learn the rules. The rule is, if there's an increase in inventory, then absorption gives the higher profit. I'm not going to go through why. If you're unsure why, go back and look at the lectures in the middle of an exam. You don't worry about why. It must become automatic. What I'm not going to write is if it's the other way, if inventory falls, because you've sold more than you produced, then margin would give the higher profit. Well, which way round is it here? We produced more than we sold, so inventory increased. Therefore, absorption is the higher profit. Marginal, therefore, is lower. Marginal profit, well, the absorption was 36,000. The difference, it's lower by 9,000. And so the marginal profit is 27,000. The answer is B. Number 5. Now here's one, in fact, I'd be quite tempted to jump over because it's quite a lot to read and to come back later. But anyway, let's look through. And be careful here, a lot of people misread the question. Which of the following factors should not be allowed for, not be taken into account, when comparing the return on capital employed of the two organisations to assess the efficiency of their management? Let's have a read and then make sure we're clear what is being asked. The Eastland Postal Service is government owned. The government requires it to provide a parcel delivery service to every home and business in Eastland at a low price, which is set by government. So they're forced to deliver, they're forced to have a low price. Express Couriers is privately owned parcel delivery company that also operates in Eastland. It's not subject to government regulation, and most of its deliveries are to large businesses in the capital city. So they can set a higher price. They only, or most of the time, they're only delivering within the capital. We've been asked to assess the relative efficiency of the management of the two organisations. So fine, we're going to look at return on capital employed and compare them. And normally, whichever's the higher, is performing the better. But here, of course, you can't compare things as they are. Eastland Postal Service, the government-owned one, they're forced to set a low price. And therefore, I would quite expect them to make less of a profit. It's not fair to compare unless we were to adjust for things to make them comparable. And it says which of the following factors should not be allowed for, should not be adjusted for when comparing. Well, A, no. Differences in price, I've just said. If they're forced to charge a low price, they'll make less profit. So if we're comparing, we've got to take that into account. It wants to know what should we not take into account. B, differences in objectives. The private company, presumably their objective is to make profits. The government-owned one, that may be part of the objectives, but it's not the main objective. They're being forced to provide this delivery service. And so if we want to compare, we would have to allow for that, have to take that into account. It wants to know what factor should we not take into account. What about C? Differences in workforce motivation. That one shouldn't make things any different. You know, part of the manager's responsibility, whether it's the government-owned or the private company, it's part of the manager's job to motivate the workforce. Just because we're charging a low price, that's not a reason why the workforce should be less motivated. That's something that we won't adjust for. Finally, D, differences in geographic areas. Well, no, it shouldn't be allowed for. It should be allowed for. I'm reading the thing with back to front. The government one has to deliver all around the country. Presumably, as a result, they're going to have greater costs than the private one that's just delivering in the capital city. So again, it wouldn't be fair to compare just as they are. We'd have to take into account the different geographical areas. Yet again, the question wanted to know which of those shouldn't we take into account? So sorry it took me a long time talking through it, but I hope that makes sense. The answer is C.